Hello and welcome to the Good, Bad, and Ugly weekly review of 29 December, the last week, the year ending. And what a year this has been. But let's look at the week gone by. So the markets really flying off after a brief 4 or 5 days of rest between 18th and 26th of December. And towards the end of the year, as you very well know, that there are expectations of new allocations towards emerging markets, towards India. There is always a optimism towards the end of the year, and that is what we have seen in this last 4 or 5 days of session, closing very near all-time highs at 21,728. In terms of the weekly chart, you can see that the last 8 weeks we've relentlessly gone up, and that's the nature of the market to have lumpy gains. There will be lumpy gains, and then there will be periods where it won't do anything for long periods. That is just the nature of the market. So we need to remain invested and wait for these lumpy gains to happen, which will happen every now and then. If you see the last 20, 30 years of market history, there won't be more than, you would say, 2 to 3 years period where a lumpy gain has not come. I mean, that's the frequency, worst case frequency that happens, and that is why we see, most recommendations are that stay invested for at least 4 or 5 years so that you have one such major move in your market journey. In terms of the benchmark overview for this week ending 29 December, Nifty Next 50 has done the best amongst the top indices at plus 2.7%. Mid and small cap index at 2.1%, CNX 200 and CNX 500 at 2% each. Small cap at 1.8% and Nifty at 1.8%. For the financial so far in the 9 months closing end of December, we have now 41.1% for Nifty Next 50, which is phenomenal. I mean, for large caps to do 41% in financial is amazing. 53.6% for mid and small cap, very, very good on mid and small. CNX 200 at 31%, CNX 500 at 33.5%, small cap 250 at 59.8%, and Nifty at 25.2%. Extremely good numbers right here. In terms of the weekend investing strategies this week, MI25 has topped the charts at 4.1% this week. It is up at 60% for financial 24. MI India top 10 is up 3.7%, beating Nifty dramatically. For financial 24, also at 38.6%. I mean, imagine Nifty stocks giving you 38.6% in this financial when Nifty has done only 25%. MI Evergreen up 3.4%, is up nearly 50% for this financial. ATH is up 3.3 and is now up 31.5%, so gaining very rapidly. MI35 up 2.6%, up 80.4% for this financial. I mean, MI35 is just rocking. NNF10 is up 2.1%, up 61% for this financial. MI30 is up 2%, up 50.7%. MIATH2 is up 1.8%, up 55.9%. MI20 up 1.7%, has done 95% for financial 24. This is by far the best performance in a long period from any strategy. And we'll talk about MI20 more towards the end of this presentation. MI all cap up 1.6%, up 63.5%. I mean, this is a amazing performance from MI all cap, especially given the fact that it is coming off a year where it was underperforming the underlying benchmark. NG 50/50, the free Nifty and gold strategy is up 1.3%, is also up 15.5%. So the whole purpose of this strategy is to get to double digits somehow, and it is managing to do that every year. HNI Wealth Builder was a little slow this week at 0.6%, but it has performed really well at 71% for the financial 24. In terms of the sectoral overview, you have autos leading the pack at 4.7% this week, metals at 4.3%, FMCG, commodities, consumption, power, public sector enterprise all following at 3 to 4%. You had pharma, real estate, infra, PSU banks, and energy at 2 to 3%, and bank nifty, private banking, and IT actually losing ground at minus 0.3%. But overall, if you see, real estate for financial 24 is up 102%. Public sector enterprise are up 75.6%, and autos are up 52%, and PSU banks at 53, the leading sectors. In terms of the sectoral momentum, you can see that momentum is coming back in the short term in real estate, in FMCG, in autos, and in consumption stocks. These are the few areas where it is moving stronger. Where it is weakening is IT. Energy stocks have weakened a little bit on infra, and some PSU banks. That's where we are losing momentum a little bit. So this is a sort of a very estimated kind of a view of what sectors are going up, what sectors are coming off, and so on and so forth. The spotlight for this week is on MI20. So MI20 has been, as I mentioned, fantastic performer and one of the most loved strategies at weekend investing. We are going to now close down the new subscriptions to MI20 from 31st December. So we've taken this decision so that the existing subscribers do not have to face any slippages or anything of that nature going forward. Because when too many people come in or too much AUM comes into any strategy, it will start to impact performance. While there has been no uh, perceivable change right now, but as a preventive measure, and we've done this in the past also with MI25, with MI All Cap, with MI ATH, that we do not allow too much AUM or too many people to ride any strategy. And that, of course, is detriment to our revenue, but at the same time, we do not wish to have any unpleasant performance for any of our subscribers. So that's where we are. So the last 2 days we are having open for the subscription for the strategy. Nothing changes for the existing users. You will continue to renew your strategies as you have always been. So for old users, nothing changes. For new users, it will not be available from 1st of January till whenever. I mean, I can't say when it will reopen because I don't know when there will be space in the bus again. Coming back to my bus examples, so it's a rotational strategy on a mid and small cap 400 index. It invests in 20 stocks weekly. It is reviewed. Recommended capital is 5 lakhs to 30 lakhs, and outlook is 4 to 5 years. Um, the performance is right there in front of you. It is also there on the Weekend Investing Hub on a daily, weekly basis. The numbers have just been mind-boggling on this, and this is, of course, the performance of the live period. But if I were to also go back and see it from the 2016 period from where we started to track it, it has done very well in all kinds of markets. Uh, so this is something that, sorry, this number is wrong. This should be, I think, minus 26%. In terms of the plot between MI20 and the underlying index, I mean, 100 rupees went to 237 in the last 2.5 years, and on the index it would have been at 161. So huge gap, and you can see that this rise from April has created this huge delta between the two. It was outperforming before that also, but the real outperformance has come in the last 9 months. Uh, so this is the closing for the new subscriptions for MI20. I think we already have a very good participation in this. So I want to thank all those who are already in MI20 and who have augmented their portfolio of strategies with MI20. It's a fantastic strategy to have. But others who would like to come in are most welcome in the next 2 days. So I'll see you in the next week's edition now. Markets are very near all-time highs. We are very hopeful for a good next year. Of course, it is difficult to say that we should outperform 2023 because 2023 has been a blockbuster of a year, and to have one blockbuster year and then some expectations need to be tempered for the next year or two. As I mentioned in the beginning, the lumpy gains will come once in a while, not every year. But who knows? I mean, the next year could be a bigger year. So we always look forward to what the market has to deliver to us. Thank you so much. Goodbye.